Solana processes 60,000 transactions per second, while Ethereum handles a measly 15 per second in 2026? Honestly, it's ridiculously slow. It's frustrating enough to make you scream. But isn't it strange? Why did BlackRock, the world's largest asset manager, choose this clunky Ethereum over the fast and sleek Solana to build their fund? Are the Wall Street elites earning millions dumber than us? No. It's because they saw 3 moats that we missed. Today, I will dissect the real reasons why Wall Street bet on Ethereum. After watching this video, slow Ethereum will start to look very different to you. The first reason Wall Street bought Ethereum is the Lindy effect, or zombie-like vitality. Imagine you deposited your entire fortune of $10 million into a bank. But that bank shuts down once a year for system maintenance. No matter how fast the transfers are, you wouldn't feel safe leaving your money there. For institutional investors, the biggest risk is not price drop, it's system downtime. Let's look at the data. High-performance chains like Solana and Sui tend to rely on centralized, high-performance servers for speed. If one fails, the whole system can stumble. On the other hand, Ethereum has a unique weapon called client diversity. Simply put, the operating systems running Ethereum are split into more than 5 types, like Windows, Mac, and Linux. Even if a bug hits one, the others stay alive, so the system never stops. This integrity of never stopping once in the past 10 years. Wall Street burned trillions on this trust. The second reason is the regulatory shield. This is a very practical issue. What do institutions fear the most? Hacking? Crashes? No, it's the SEC, the US government. Now, here's a point a lot of people miss. Solana ETFs also got approved, right? Yes. Spot ETFs passed in October 2025. But for institutional investors, what matters isn't whether it's approved, it's how much earlier it was approved. Ethereum Spot ETF was approved in July 2024, a full 15 months before Solana. What happened during those 15 months? BlackRock launched Ether and restructured their entire risk model around Ethereum. Harvard endowments, sovereign wealth funds, BlackRock's own funds. They all built Ethereum ETF positions into their portfolios. Do you know what BlackRock's Ether alone is managing right now? $11 billion. And all Solana ETFs combined? About $1 billion in their first month, an 11x difference. In the institutional world, there's one unspoken rule. The first one in builds the road. Ethereum already built that road. The last and third reason, and this is the most important one, it's the internet bond. Retail investors who chase growth stocks only look at capital gains, but massive capital? It loves cash flow. What do you get when you buy and lock up Ethereum when you stake it? Yes, you earn interest. This is the base rate of the digital world. Don't other coins give interest too? Sure, but there's a real difference. Solana offers staking rewards too, sometimes 11%, even higher numbers. But the major portion of that interest comes from printing new Solana tokens. Solana's annual inflation rate right now? 4.7%. In plain terms, you're earning 11% interest, but the currency itself is losing 4.7% of its value every year. So what about Ethereum? Ethereum has a mechanism called EIP 1559. The base portion of the fees people pay gets permanently burned, destroyed, with every single transaction. As a result, Ethereum's actual annual inflation rate is just 0.35%. That's 15 times lower than Solana. In other words, Ethereum's staking yield is closer to real cash flow generated by actual network activity, while Solana's yield is largely funded by, quote, newly printed tokens. The difference is, this a Manhattan building where real tenants pay rent every month, versus an empty building where the owner just issues new shares to pay shareholders. Wall Street sees Ethereum not as a coin, but as a blue-chip stock that pays dividends and digital real estate. Let's wrap it up. Sure, for gaming, for buying coffee, fast and cheap Solana is king. I'll admit that. Solana might capture the entire retail market, but the wholesale market, where bonds worth hundreds of millions are traded, where national funds are settled, that's different. There, safety, legal protection, and guaranteed yield matter more than speed. Let's grade Ethereum's report card. Speed? A C. It's frustrating. But security? S tier. Regulatory safety? A+. Cash flow? A. The conclusion is clear. Ethereum is digital Manhattan real estate. Boring, but it never fails, and the rent comes in like clockwork. BlackRock is buying this building entirely. Are you really selling just because the elevator is slow? So how long should we hold Ethereum? Could this Manhattan building ever collapse? Of course. Nothing lasts forever. In the final part 3, Ethereum exit scenarios. Sell everything when this signal appears. I'll give you the exact sell timing to protect your money. Subscribe and stay tuned.